I wonder if you think, Doc, we overdid it on this Delta fear sell-off we had. You know, Friday, Monday, the market pulls back dramatically. Now we've had this nice rebound. You saw and you talked about what the VIX did. We talked to Lee Cooperman yesterday. He's not looking for a big air pocket lower. Here's what Lee said. You can react to it on the other side, Doc.
Near term, the conditions that lead to a big decline aren't present. I mean, where are you going to go with your money? You know, if my choice is cash earning zero, a 10-year bond, which is ridiculous at 1.3, or buying my favorite equity.
He's going to buy his favorite equity. Is that the move, Doc?
Yeah, that is the move, Scott. And as I described yesterday, the way I do it is generally when vol comes in as much as it's in. I mean, it dropped dramatically yesterday, Scott, down another 6% in the VIX today. We're falling through 19 back down to about the 1850 level. So was it overdone? The fear came, of course, because we saw the 10-year rate move so quickly to the downside. It's the same thing as when the 10-year rate was moving up in February and March, Scott. When you see moves in that multi-trillion-dollar market that are happening at light speed, that scares people. It pushes them to the sidelines. They don't know what's going on. So instead, they just, hold cash in both cases. They held cash when they saw the rates jump up. They held cash when they saw the rates go down so dramatically. I still think we're going to see a trend lower and that we will probably plumb down towards that 1% level, Scott. But just as we said in the first part of the year, as long as it doesn't happen real fast, as long as it's a steady progression, I don't think that's going to cause people to freak out. Instead, I think they'll look at it as Mr. Cooperman did, that this is a great opportunity to accumulate some stocks.
So, Kate Moore, I mean, it's the most simplistic question, but it's the most obvious one. It's the one everybody's thinking about. Was that it? Was this 3% move lower the bulk of the correction, right? We wake up, we realize where else are you going to put your money, as Lee said. Bond yields are low. The economic story continues to improve. Yes, the Delta variant is a concern, but the vaccines are good. The vaccines work.
They do. And look, we still believe equities are the best and most attractive asset class through the balance of the year and probably well into 2022. That said, I don't know that we've seen the end of some of the air pockets in the equity market. Positioning is really full. This is something I've been focusing on a lot. We see institutional investors and retail investors participating in the market. That's great. But the question is, absent a big catalyst, and I think Shannon mentioned this a moment ago, we've got earnings, but people are expecting earnings growth to be outstanding. The question is, what is sustainable earnings after this phenomenal quarter? And then we have Jackson Hole. But absent a huge catalyst to put additional risk on, especially given that we have had very, considerable positionings in equities across institutional and individual investors. It's like, we may see some sort of sideways movement, a few of these air pockets. I do tend to believe that when we get these air pockets, it's a great opportunity to re-up your strongest conviction calls. And for us, that's in the tech space, that's in the consumer space, and we continue to think there's more upside in energy. Wow.